Take the gambling out of the trade. What's going on, everybody? It's your boy Matt, back at you again with another trading related videos. In today's trading session, we're going to be talking about a very important topic, which is take the gambling out of the trade. That is going to be the theme for this week. One of the things that I used to do in my trading career is I used to trade pre-market and I used to lose money. I lost more money trading pre-market than I made. So what did I do? I cut down in trading pre-market. I stopped trading pre-market. If you have a trading strategy that you're losing more money on than you're making, what do you got to do? Stop that trading strategy. If you're trading pre-market or aftermarket, or if you're trading the opening range, whatever it is you're doing that is losing more money than what you're making, what do you got to do? You got to cut it down. Be smart about it. Take the gambling out of it. Monday is usually a FOMO day where everybody's just itching to trade. They come into the market, they jump on the bandwagon and start pressing buttons. So as a smart trader, what do you got to do? Take the gambling out of the trade. Take a step back. There's too much volatility on Mondays. You don't know, it's unpredictable. Everybody's just jumping on the bandwagon. As a trader, what I want to do is foot off the pedal, slow down, take a step back, let everybody do whatever they want to do. If they want to jump on the bandwagon and start pressing buttons, let them do it. Come back later on after they're blown out, start shorting whatever they pushed, right? As a trader, majority of the biggest losses that I've ever taken came from Monday. Jumping on the bandwagon and start pressing buttons, sizing too much too early. Those are the biggest losses that I've ever had. So what did I do? I have to change, I have to adopt, cut that part out, slow down on Monday, take small share size and slow down. That's how I approach it. So remember, the theme for the week is take the gamble out of the trade. Whatever is not working out for you. If you have a certain strategy that is not working out for you, if you're trading a certain period of time, say pre-market or aftermarket, and if you're losing more money on it than you're making, cut it out. Or at the minimum, slow it down, downsize, right? Anyway, guys, thank you so much for watching. I really appreciate it. Make sure you hit that thumbs up, subscribe to the channel, and there's also a link down below for a free chat that I have on Discord, and enjoy the trading recap. Thank you. All right, traders, let's talk about some of the trades that I took today. As you guys can see, I am up $534 in today's trading session, which is okay for me. Today's Monday. So for me, the way I approach Monday is always foot off the pedal, slow down, take a backseat, let Monday set the tone for the rest of the week. And the reason why I do that is I have a very good reason. I went ahead and had a look at my trades. The majority of the biggest losses that I've ever taken came from Monday. And the reason for that is pretty simple. You take a break on the weekend, you had a crazy weekend, you were eager for it to be Monday so you can start pressing buttons. Monday comes in, you start pressing buttons, you jump on that bandwagon, you jump in too early with too much size, and you end up eating a big loss. So I got to be smart about it. What I got to do now is Monday comes in, I'm going to start slowing down. I'm not going to jump the gun, right? Because it's not working out for me. And if you have a trading strategy that is not working out for you, you got to cut it off. If you're trading pre-market and you're taking more losses in pre-market than what you're making, stop trading pre-market. If you're trading aftermarket and you're taking more losses than gains aftermarket, stop trading aftermarket. So you got to be smart about how you're approaching your tradings and focus your energy on what's working and cut down, or at the minimum slow down what is not working. So for me, coming on a Monday and jumping on a bandwagon and eating up a bigger losses, that was a problem. So what I do now is I'll take a step back, let Monday set the tone for the rest of the week. Is it momentum week where we've seen a lot of volatility so I can get aggressive in the long side? Or is it a dead market and a lot of things that pop up are washing out so I can short aggressively? So those things are, for me, what determines how the week is going to be, right? We set the tone for the week on Mondays. Let everybody come in. Let everybody have FOMO on a Monday. Let everybody start pressing buttons. You come back later on and scoop up the scraps. That's fine, as long as you're not taking losses or you're cutting out strategies or time frames that are losing money for you, then you're good to go. That's how you improve as a trader. Anyway, so that's one takeaway from what I do. So let's talk about some of the trades that I took right here. The first one was CCL. As you guys can see, CCL popped up. It was a gapper. I shorted it. My average was 1772. Right there was my average. Let me just zoom in. So right there was my average. The reason why I shorted there is because it was a pre-market high. I was hoping a pre-market high would reject, but it came up. It broke the pre-market high and kept going, and I ended up eating a $139 loss on it, which is completely fine. I had a trading plan. I executed a trading plan. It didn't work. That's fine. Other times it works, I'll bank on. right? So the next trade that I took was XPEV. Now XPEV, I took a couple of trades on it. The first trade that I took on it was at $44. So it came up to this pre-market higher range, put a double top. So I looked at that and I shorted right here. So what I wanted XPEV to do was I wanted to, get into a trend. I wanted a downside trend and to let it work for me. I wanted to hold for a longer move, for a bigger move. So what happened was it cracked this bottom, which is a good sign. But then it bounced out immediately. It just bounced, right? So this bounce was a bad sign because it had found buyers. Though it cracked a major support level right here, it bounced back. I saw that. So I was like, okay, this thing is not done. It's not going to set a trend line. So I got out for about $1 win, right? And I was correct because, because it did find buyers right there. It supported this area where it bounced from. And as you guys can see, ended up going higher, right? So there's no need to start holding stocks that are not working for you, that are not doing what you think they should do. So this should have cracked after cracking these major support levels. What it should have done is maybe consolidate around the VWAP and crack and go lower. It shouldn't have found buyers to bounce it up like this. That was a major bounce, so I got out, which is fine. So the next one the next trade that I took on it was, as you guys can see, the average was 45.20. So 45.20 right here, right? Pop here, it came up, I shorted there, and I took a profit on the way down. I didn't hold it for long enough on this because I'm thinking, okay, this is an upside trend. It's going to keep going up. So I didn't hold for longer, but I should have been on this trade. So I made about $75 on that one. And then I got back in here again at $44.75, and then I made another $34. But I was going on a very small share size. The next trade that I took was CBAT. Now, as you guys can see, CBAT was actually a good trade. This is where I made a majority of the money on. And the reason why I made a majority of the money on is because I had that Monday mentality. A lot of people, if you guys have seen other people's trading recaps, they got chopped up into this. As this was going up, they were shorting and they were getting chopped up. So for me, what I wanted was I knew I wanted to stay patient. I knew I wanted, to let everybody start pushing the buttons and I'll come in after, right? So I stayed patient for the pre-market high area to come in. So pre-market high area was at 1060. My average was at 1030, right? So I waited for a rejection of that pre-market high. It rejected that and I got back and I hit it twice, boom, boom, 600 shares, and I took profit in this and the way down, right? And I did not stay my welcome. I took my profit into this, the $9 area, and then what happens is I tried to get in a second time into the spot, but I lost 30 bucks on it. And that was it, right? So as you guys can see, people was short in this major volume right here. You guys can see this major volume, and people were shorting, and then it popped on them. So this is why you want to slow down, take a backseat, and let everybody do whatever they want to do. Let the trade form. Let the trade come to you on Mondays. Don't go too aggressive too early. That's how you end up eating a bigger losses than you expect. Because if you think about it, everybody's itching to trade on Monday. I mean, you have a lot of gamblers in the stock market. They want to come in and start pressing buttons. So for that reason, you want to take it a step back. You don't want to be doing what the 90% are doing, right? You want to take a step back, let the trade come to you, and then take a trade. Slow it down. It doesn't matter. I mean, my daily goal is usually 1,000, but I'm up 500 bucks on a Monday. That's fine for me. It's an improvement. As a trader, what you're looking is not the money. What you're looking is how are you executing the trade. What is your trading strategies look like? Anyway, guys, thank you so much for watching. If you have not subscribed to the channel, please give it a thumbs up and hit that subscribe button. And now enjoy the actual live recap video. Thank you, guys. Alright, guys, welcome to the live trading part of my videos. As you guys can see, I'm about to get in a trade, CBAT. I'm looking for this 1030, 1040 area for a pre-market high rejection. So I have my order. As you guys can see, I'm not waiting for, I'm not chasing it down or anything like that. I had my order in. I wanted to come and fill me. It filled me. Now I'm waiting for a rejection around this area. As you guys can see, the level 2, focus on the level 2 right here. It's not really going volatile. It's actually, struggling to break. And what happens with that is if you're a long trader and you buy it all the way to the pre-market high and it's not breaking out, struggling, you're going to turn around and start hitting the bid. So now I'm seeing the rejection, I'm seeing the struggle, I want to add in. I'm only in 300 shares. So I'm waiting, I'm staying patient. I'm looking to add though. I want to go up to 1,000 shares into this. So I'm just waiting and watching at the moment. I'm noticing the struggles, I'm noticing, but I want a clear sign of rejection right now. Right? So now it looks like it's rejecting right here, but holding up for too long at the pre-market high at the top is also not a good sign for short sellers. Because for both sides get nervous. Would it break and go higher, or would it reject, right? So I'm seeing that rejection, just added right there. Now I'm in 600 shares. As it's going down, I want to add to this. I still have 400 more shares that I want to add because I want to go up to 1,000. So I'm in 600 shares at the moment. But risk level at this point is if it comes to over the highs and breaks this, I'll make sure I'll take the 300 off and then hold the rest. So it's popping up, which is fine. You know, I'm looking at this, but now I know if you're a long trader and that attempt, you get nervous. You get nervous. This is not breaking out. They're buying, buying, buying. As you guys can see, each 1 minute candle is about 1.2 million shares. And it's not, as you guys can see, they hit the bid. And quickly, I try to cover half on that bottom, the 950 area, but it didn't feel me. But that's what happened. So, you know, runs up to the pre-market high. It tries to break the pre-market high, but if it doesn't break the pre-market high, if it starts to struggle breaking the pre-market high, everybody who are hitting the ask, who was buying, they would turn and they'll start selling. And that one candle, that 1 minute candle, was about 2 million shares of rejection candle. So that's what a pre-market rejection looks like. Everybody would pile up on a buy, trying to break it out. But when it doesn't break it out, guess where they're going to go? They're going to turn around and they're going to go sell. So I'm still holding, you know, so I'm still holding a little bit of shares from, you know, 1027, 1030 average. I took majority of it. I'm holding only 150 shares into this, you know, the low nines. And I'm up about 500 bucks on a day, which is pretty good. You know, an easy trade. This is how you gotta trade. You gotta, you know, for Monday usually, you know, I take a step back, slow it down, you know, and then I take the trades when it comes to me. I do not anticipate and jump on the bandwagon and get, you know, shaken out. I'm pretty sure a lot of people who shorted the front side of this got burnt a lot, right? So this is the reason why you gotta slow down and let it work for you. Anyway, guys, thank you so much for watching. I really appreciate it. If you have not subscribed to the channel, please do so. It would help me grow the account, put out better educational content for you guys. Make sure you comment down below, hit that like button, and also there's a link down below for a free chat that I have on Discord. If you want to pop in and say hello, that would be great as well. Thanks so much, guys. I really appreciate it.